Welcome to the first of our what will be monthly videos coming out to you from Strategic SMSF Solutions. And I hope you've all had a wonderful Christmas and New Year and at least got some rest over that period of time. Going on from our original discussion when we looked at the new ASIC Note 274, which was covering updated guidance for SMSF advice issues, there's been some further commentary that's come out both from ASIC and a number of industry participants, which look at the issue to do with the disclosure of costs within SMSF advice. Now, interestingly, some of the commentary has said that the costs now need to be broken down to consider things like optional costs and unavoidable costs. Well, in the main, of course, most costs associated with the operation of an SMSF are unavoidable. There also needs to be an acknowledgement that the cost of running an SMSF will vary over the life cycle, depending upon what phase the client is in and what types of strategies they are looking to undertake and what kind of investments the funds will make. So, for instance, one of the issues that ASIC is clearly referring to is potentially the transition from the accumulation phase into the pension phase. How's that going to impact costs? Well, of course, one of the major impacts is going to be the incurring of an additional cost in the form of an audit certificate. Now, the audit certificate is not that expensive, but where we've got a mixture of different types of phases within the superannuation fund, we will need to have almost certainly that audit certificate to be able to complete the calculation for exempt current pension income purposes. That's vital because that leads to a greater degree of tax effectiveness for the fund. We will go into some detail at a later point as to exactly what exempt current pension income is, how it's calculated, and how certain timing issues can allow us some flexibilities and strategies in managing the tax-free nature of earnings on pensions. Secondly, the ATO has also reminded us that transfer balance account reporting is moving to a quarterly cycle rather than, in some cases, an annual cycle from the 1st of July 2023 for all SMSFs. We can assist in looking at the correct reporting to the ATO because our administrator is reconciling accounts on a quarterly basis, and therefore we have up-to-date information ready to make those transfer balance account reports. This is particularly important if you're working with a client on pension management strategies, and you need to know. One of the difficulties we've had in the past is in many cases, we're 12 to 18 months behind in the information that has been reported to the ATO. Doesn't help matters, and it can lead to errors. So the fact that the ATO is now insisting on quarterly reporting at least means we are having a more up-to-date picture of the SMSF than we have previously had. Now, talking about pensions, pension obligations, tax effect, and all these related issues, one of the aspects of reporting that we can help you with is the calculation of minimum pension payment requirements for those people who are in receipt of pensions in an SMSF. As we move more into the SMSF sector, we lose a lot of the support that we've had from administration in the past in industry and retail funds who automatically calculate and ensure that the minimum pension payment obligations are met by the client in one form or another. Within the SMSF environment, we actually don't have that necessary backup and support. And of course, we all know that where a pension fails to meet its minimum pension standards, in other words, there's a shortfall in payments, we can be in a particular position where the fund loses its exempt current pension income status in respect of that particular pension account for the entire income year. But I point out that that's only relevant to retirement phase pensions. Secondly, if in fact it's a TRIS, we could be in a position where if we've failed to meet the minimum pension payment requirements and some monies have been taken out, they may need to be treated as lump sum payments, which could be in breach of the preservation rules. Therefore, we've got a further issue because, of course, if we breach the preservation rules, we've had an unlawful access to superannuation monies. The ramifications, the loss of exempt current pension income is particularly important because the earnings on the account in that year will actually add to the member's taxable component rather than being proportioned across the tax-free and taxable components that were established at the commencement of the pension. So we actually have to do a recalculation. Now, the interesting thing is that, of course, when we talk about losing status for a particular income year, what we're referring to is the loss of the pension status for income tax purposes. In the past, there has been a range of issues associated with questions that arise, such as, do we actually need to do new pension documentation? The ATO has clarified a lot of those issues, but essentially we need to go back to the beginning of the year in which the pension failed to meet its obligation and recalculate certain things. We then need to be in a position where we can recalculate the start of a pension for the following income year. So there's a range of things that we need to be very aware of. Where we can help in Strategic SMSF Solutions is to provide you with the information to go back to your clients so that they're in no uncertain mind as to what their pension payment obligations are. We generally start writing to clients, if this is what you need, around April, May to remind them of their various requirements. And then a follow-up can be done by yourselves to ensure that the client has actually met their payment obligations. The dashboard of the administration system that we're utilising also allows us to have a quick look and to determine whether the software has automatically picked up pension payments. There's a range of issues that we will further discuss during these monthly video sessions. But what would be of great assistance to us is if you've got any special issues or strategies that you'd like us to cover off in these shorter videos, please let us know. All the best to you for the rest of the calendar year and leading up to the end of the financial year. And as always, if you've got any queries, please don't hesitate to contact. Thanks very much.